Hi, I'm Jenny Brown. A warm welcome to this week's MFB news, and I say warm because hasn't it got cold really quickly all of a sudden? I'm finding it much harder to get up in the mornings. I'm not doing my sprightly 5:30 a.m. jump out of bed now. It's cold and dark, so be prepared for 6 months of me moaning about the weather, I think. Now, in terms of what we've got for you this week, we're going to do our usual roundup of what the lenders have been doing with their pricing and any criteria changes, and there have been a couple. We're going to talk a bit about the latest house price data and also rental yield data as well, and the kind of expectations for rents over the short to mid-term. And then we're also going to be covering off our latest feature, question of the week. Just a quick reminder, if you have any questions about anything mortgage related, please do put them in the comments below. We'd love to be answering the questions of people who watch this video. I think that's the most sort of impact that we can have for you, so please do ask away. And then finally, we're going to be sharing a report which is a deep dive into what is a typical UK landlord. So it really looks at the demographics, the ages, that kind of stuff, and it really gives you a kind of flavour for where the market is heading in terms of longevity of the private rental sector and what we'll be looking at in terms of divestment. Okay, so where are we with swap rates first of all? So it's actually quite interesting when you look at the data. So we're kind of almost the same as we were a month ago and slightly lower than we were a year ago. And obviously a year ago we just had a mini budget and the world was going to hell in a handcart at that point. So good news that we know there. So 2-year swap rates today, 5.055, 1 month ago 5.076, and 1 year ago 5.242. So you can kind of see what I'm saying about those numbers there. 5-year swaps 4.544, 1 month ago 4.533, so pretty much on parity there. And then 1 year ago they were 4.603. So as you see, things have kind of come down year on year. Obviously we've kind of been on a bit of a kind of U-shaped journey throughout that period of time, but in terms of month to month, which is really more relevant to you guys, things are staying largely static. Now, we have had the inflation news come out this morning, which has said that basically inflation hasn't moved from last month. I don't see this as a huge shock. I'm not expecting much in terms of ripples on the back of this, mainly because there was always an expectation that the direction of travel wouldn't be simply a straight downward line. There would be kind of bumps along the way, and with some various sort of pricing changing in terms of oil prices, for example, in the last month, I don't think it's going to come as any great surprise that we haven't seen a downward step in terms of the inflation data. So in terms of what's been happening with the lenders now, so again, we've seen more repricing going on, which is always very pleasing to see. Slightly different set of lenders, I think, looking at the names this week. We've seen YBS, Yorkshire Building Society, make reductions of up to 0.2% to their proposition. Now, these guys are a commercial lender who do buy-to-lets only for limited companies, and their offering is very, very strong. They're commercial underwriters. They really are able to get under the skin of complicated deals, slightly quirky share structures, for example. They can take on large HMOs and multi-units. They don't mind things over commercial. They can do semi-commercial, full commercial. So they are actually a really fantastic lender. So in terms of their pricing, so their commercial investment rates are from 7.69% now, semi-commercial from 7.3%, and their limited company buy-to-let rates are from 5.25% on 5-year fixed rates. So a really good kind of step down from YBS. And like I say, their offering is really, really incredible actually in terms of the knowledge that they have and their ability to look at slightly left of centre deals, shall we say. Now, we've also seen Foundation Home Loans make some changes to their products. So they've reduced notably some of their limited edition rates. The pricing here now from 5.94, Foundation Home Loans specialist lender, HMOs, multi-units, no minimum income requirement, no maximum number of properties in the background, all that kind of stuff. Santander, not a specialist lender by any stretch of the imagination, have reduced their rates by up to 0.35%. Santander, look, they have a solid buy-to-let offering. We don't do huge amounts of transactions with them because we just find them to be incredibly restrictive in terms of their lending criteria. They're not overly open to people with larger portfolios. If you've got more than 10, forget it. And actually, they're just never really quite there in terms of pricing, but it's good to see such a large institution drop down rates. And as always, when people like Santander, HSBC, NatWest, Barclays bring down pricing, it does tend to ensure that other lenders will start reconsidering their pricing structure and just trying to ease things down too, because they all want to drive up business at the moment. They're all desperate to lend you their money. Clydesdale also made some reductions of up to 0.3% across their 2-year fixed rates. Clydesdale, very, very niche lender. They have a really very generous, that was terrible English, sorry, a very generous rental calculation. Because what they do is actually everything is affordability based. So essentially they're going to take all of your income and then look at all of your outgoings, and as long as everything kind of makes sense in terms of how they would perceive affordable, then they would be able to offer you the loan. So really this works for people who maybe have a well-paying day job, they have a mortgage on their own home and one buy-to-let, and they're looking to refinance that buy-to-let, but the rental income wouldn't be stacking up elsewhere. So that's kind of where Clydesdale really come into their own. Now, Clydesdale are also part of Virgin, who have incidentally also reduced their rates by 0.21%. So their pricing is now from 4.99. And we've seen the Coventry reduce some of their 2-year fixed rates, some of their 5-year fixed rates, and increase their tracker rates. So not an uber busy week from the lenders this week, but actually in terms of the sense of what's going on, we're seeing some pretty large institutions bring down pricing there, which always kind of leaves the door open for other lenders to be reconsidering their pricing structure and seeing if they can follow suit. So we'll keep you posted as always, but hopefully we'll see more downward pricing next week. In terms of lending criteria changes, 2 lenders have kind of published some tweaks to their policy. So first of all, the Mortgage Works have been fiddling around with the maximum loan to value they have for people with larger portfolios. So the wording is their maximum loan to value has increased to 75% from 65% for portfolios with 11 or more properties. They've also reduced the stress rate to 5% from 5.25% and increased the aggregate portfolio loan to value to 75% where nationwide buy-to-let exposure is over 1 million. Nationwide owns the Mortgage Works, incidentally. So what's this actually telling us? So basically what the Nationwide Mortgage Works have done is that actually you don't want to be quite so onerous in terms of our requirements for people with larger portfolios. So we're going to increase the maximum loan to value of the portfolio that we'd accept to 75%. And also we're going to reduce the stress rate on that portfolio. So that's really good. The Mortgage Works, actually, I did a webinar with their like whole staff this week, which was really interesting, where they asked lots of questions about their service offering, the products that they bring to the table, that kind of stuff. They're very keen to make some changes and really kind of widen their nets in terms of the types of landlords that they can lend to. So really good to see them making good on those intentions. Now, Precise is the other lender who has made a change to their conveyancing panel. So what they're doing is that they have essentially launched a new conveyancing panel, which is going live later this month. And this is going to have a pre-selected panel of over 30 conveyancers with a fixed fee schedule in place to provide customers with a more consistent service and certainty over costs. Now, this is interesting in itself, but actually I think what's more interesting for you guys watching this video is the subject of conveyancing panels. So one of the things that doesn't often get talked about is the fact that every single lender will have an acceptable panel of conveyancers that they will use and allow to act for them when doing mortgage transactions. Now, some solicitors' panels are absolutely enormous, like thousands and thousands of firms. Others can be as small as just 2 or 3 companies, 2 or 3 law firms. The reason this is important is that if you are buying a property and you have started your legal process and you've paid money, or indeed if you have a solicitor that you're very kind of wedded to, that you really like using, it's worth flagging that at the very beginning of any conversations when you're looking to take a mortgage, because it doesn't necessarily mean just because you like your solicitor or if you spent some money with them, it doesn't actually mean that the lender will accept them. Now, if it turned out that the solicitor that you wanted to use was not on the lender's panel, you're faced with essentially 2 options. You can either change solicitor, which if you spent money, you might be quite reticent to do. Or the second option is that your solicitor can continue to act for you, but the lender will still want a solicitor from their own panel to act for them to make sure that things are kind of done properly and that they're comfortable with who's being used. And the kind of key point here is that therefore you end up with 2 solicitors. You have to pay the cost for both of those, of the lender's representation as well. So that can become quite expensive. And also in our experience, when you've got lender solicitor and borrower solicitor, so you've got 2 solicitors kind of working together, it often kind of really slows things down. So I think the message is, if you are going to be looking to take a mortgage and there's going to be some conveyancing work, it's probably worth kind of trying to choose your lender first and then find a solicitor to fit within that remit, rather than trying to find a lender to fit around your solicitor. It's a bit like the tail wagging the dog, isn't it? So anyway, so that's what Precise have done this week. So another good bit of lending criteria changes from the lenders really shows these guys are digging deep to try and find ways to improve their service and offering to our landlords. House price growth and rental yields. So house prices, according to the latest report from Nationwide, have remained unchanged over the month, but remain down 5.3% year on year, which equates to £14,500. All regions recorded an annual house price fall in Q3 of this year. The Southwest was the weakest performing region, with prices down 6.3% year on year. So that's kind of where we are with the latest data on house prices. Now moving on to rents, this is a kind of very different story actually. So HomeLet's latest rental data has shown that the average UK rental price has hit another all-time high of £1,276 per calendar month in September, increasing a further 1.19% from the previous month. Excluding London, the average price of rent in the UK is now £1,061 per month, up 0.95% from last month. However, London prices have continued to soar, up 1.59% to a new high of £2,179 per month. Now, just to say that it's not all kind of rosy, so Scotland and the West Midlands monthly rent decreased for the first time since January 2023, 0.81 and 0.53% respectively. It's the first change in their market for a really long time. In terms of the broader data and the reports that we're reading, the expectation is still very much that rents are going to continue to increase over the next coming months and also years, or next 2 years at least, just purely because of the level of shortage of housing in the private rental sector. So look, we'll continue to report back on this data for you, but at the moment I think we're really in a situation where house prices are, they haven't decreased further month on month, but they are down significantly from this time last year, but yields are continuing to increase, and that probably explains why we're starting to see a few more landlords come out of the woodwork, put their heads above the parapet, and are now starting to look to buy again. Okay, now Confused.com have released some data which I just found really, really interesting. It really kind of gives you a feel for the landlord community and the kind of demographics that sit behind that. So what they've said is that, first of all, in England, the investment population is primarily private individuals. So this is 93.7% of landlords are individuals. Companies are 4.7%, and a mixture of private and companies forms 1% of the landlord population. Now, some 43% of landlords have just one property, 39.3% have between 2 and 4, and landlords with 5 or more make up less than a fifth of the total landlords. Most of England's landlords are aged 55 and above. That's 62.8% of landlords aged 55 and above. Just 0.1% are aged 18 to 24, and only 2.2% are aged 25 to 34. A total of 52.9% have been landlords for 11 years or more, 38.5% for the last 4 to 10 years. And the largest group of landlords are those who are retired, so 34.9%, followed by full-time employed, 29.7%, and self-employed in roles other than as a landlord, 14.6%. Self-employed employment as a landlord represents 13.5% of the group. So that would be essentially people who are just do landlords, have no other sources of income. Most landlords, so 57%, have a buy-to-let mortgage. However, 38.3% have no debt or no borrowing. Now, elsewhere in the analysis, it's revealed that 15.29% of homes in England are privately rented, with 14.9% in Scotland and 14% in both Wales and Northern Ireland. London is the location with the most rented homes, with 20.81%. The northeast of England has the least, with 13.27%. So there you go. So just a kind of overview of kind of, particularly the ages actually really interested me. So the fact that so many landlords, over half of landlords, are 55 and above, it does make you wonder that actually if these guys do eventually decide to retire and come away from the market, and yet there's hardly anybody at the lower kind of end of the scale in terms of ages investing, where's that going to leave us? In more hot water, I suspect, in the private rental sector going forwards. Okay, now for question of the week this week, we have got an absolutely fantastic question from Dee. Dee, thank you so much for contacting Chris and sending this over, really appreciate it. So Dee has asked, why do lenders only rely on surveyors' valuation market rate for rental calcs and do not consider the rate paid, the income rate, on the landlord's AST? If a landlord can demonstrate year-on-year rental payments, can these historical AST amounts also be considered for the lender's rental calculations, as evidenced in the rental income account? Now, this is such a great question. So Essentially, it's really tricky, this actually. So a valuer's job is to go out and comment as to the rental income the property would achieve if it were to be relet on the open market. Now, sometimes this can go against you, as the kind of example that Dee has just given. So where you're achieving a level of rental income on your property, you've been achieving it for a really long time, surveyor goes out and says actually market rent is lower, and you're saying, well, hang on a minute, I'm receiving this high level of rent, so how can that be? Conversely, actually, some lenders will accept the market rent irrespective of what you're actually receiving. So this works particularly well for those landlords who have got tenants in property. The tenants have been there for quite a long time. The landlord's really reluctant to keep increasing the rental income because they've got great tenants and they don't want to kind of, put these people in kind of any sort of financial stress. So these guys have chosen to leave the rent lower than they could be getting on the open market. So some lenders can consider the market rent if it is higher than the passing rent. So to answer your question, Dee, yeah, it's very, very frustrating this. And why do the valuers come back with different figures to what you're receiving? They will always produce comparables. So what they would do is take your property, they would find similar properties of a similar size and condition and, standard nearby and how much those have rented for. And that is the kind of justification for the figure that they give. Now, it might not necessarily be in agreement with the number that you're receiving, and I do appreciate that can be so frustrating, but fundamentally it's all about kind of evidencing and justifying the figures they've come up with. So if they come up with comparables showing a lower figure than that you're receiving, then they're probably going to stick with that figure, which I know can be super annoying. Now, the kind of difference here and the thing to say is that lenders can sometimes use the passing rent if it's higher and kind of ignore the surveyor's number. Now, not all lenders will do. Some lenders literally just defer to the surveyor, but there are lenders as well who actually will take a kind of pragmatic view and say, we understand what you're saying, Mr. Surveyor, this is what the open market rent is, but actually clearly the tenant is paying way more than that at the moment, so we'll go with that number. So actually the surveyor's job is just to comment on fair market value. It's the number which the lenders accept, which I think is kind of more important to you. So not a straightforward one to answer, but still an amazing question, but I hope that helps. I'm sure if you're in that situation with your lovely property where you've had this issue with the rents, Chris would be able to find you a deal where the lender would be able to take passing rent instead. So there we go. So that is everything for MFB News this week. And I'm afraid I'm not going to be with you next week, actually. I'm going to Istanbul for a few days, which should be very exciting. So I'll be back the following week. For those of you who are on half term for 2 weeks, good luck. For those of you who've got half term next week, have a fantastic time. I hope it stays dry, maybe warms up even a little bit. If you have any questions, we're always here to answer them. We'd love to hear from you. 0345 345 6788, and you know that our website has got an absolute abundance of information. See you in a couple of weeks, guys. Until then, take care.